Happy 4th of July week, a time for celebration, time for independence, and let's make it financial independence. Hey everybody, Courtney Smith here with our June 29th edition of Wall Street Winners, coming to you since 1995. And this has been coming to you a little less often, but trust me, we had disclaimers back in 1995. Okay, I've got a change in my attitude here. Here you can see we've got a potential failure top. The market rallied up to all-time highs on the NASDAQ, not on the S&P. But take a look at this. So we go up in early June. We don't make a new all-time high, although we did in the NASDAQ. We come down for a week, then we rally back up, and now we're headed back down. Now, we haven't broken the low that we made in the middle of June, but it looks pretty bad, and I'm going to show you some reasons why. Dow, more selling pressure than buying pressure. You can see that with the little red line is higher than the little green line in the upper right-hand corner. So that's what's happening there. Now, the NASDAQ did make new all-time highs in June, twice, in fact, in June. And the purple predictor was accelerating dramatically, which made me very bullish. And still, look for NASDAQ tech stocks to outperform. You'll know that this market is over when the big five, the Amazons, the Apples, the Netflixes, when they start to crack, that's the end of this bull market because they're the leaders and account for 25% of the whole NASDAQ is just in 5 stocks. We also cracked down on Friday on heavy volume. Now, seasonality, we're saying neutral right now for both utilities and the stock market. Now, this shows that we should see a little bit of a pop and then kind of sideways. The yield curve, I mentioned this a couple weeks ago, but the Fed has officially come out and said that they are targeting the yield curve. And I was saying, gosh, it looks like the Fed is targeting it, they're solidifying it, they're painting it, they're putting it in stone, and they've come out and admitted that that's exactly what they're doing. But of course, you heard it here first on Wall Street Winners because we're looking at the deep fundamentals on your behalf. So they're targeting 50 basis points, which is not good enough. They need to get it up about 200. But since they don't understand economics, they will keep it too low. And what this means is that I do still look for a bear market. I still look for the economy to weaken. But when the economy comes back, it's going to be the slowest economic recovery in history. It's going to even be worse than the 2008 recovery. Asset allocation, they're moving into bonds. They're moving money out of the stock market and into bonds. And if they're in the stock market, they're moving to less and less risk. Less and less risk. Global shares about the same as the S&P. Bonds starting to rally. We're seeing that money come in there, and I'm going to start to buy some bonds here this week. I've been really bored with them, but we now have a clear bull market. We've got a very strong purple predictor, so I'm going to be moving into the bond market. Obviously, I'm not going there for the yields because the yields are like zero. But I'm looking at it for capital gains, and I think that we'll get back up to the 172 area. So that'll give me 7 points, which in the futures market would be $7,000. In TLT, it depends on how many shares you buy. This is suggesting that we are going to stay low, maybe move a little lower. Dollar stable. Now, gold. So we made a new high on gold this week, and Friday was very strong price action as we saw safe haven buying come into the market when the stock market started to crack. So I'm going to start to rebuy gold here again. I don't think it's going to be an explosive bull market at this point. It'll be a sluggish bull market, but nonetheless, we should be able to make good profits on this market. So I'm going to step back into the gold market. I think the best place to be is in gold itself, not in gold shares. Gold is slightly leading the rally up. If you look at the charts of most of the stocks, or if you look at a chart of, say, GDX, which is an ETF which mimics large cap gold mining stocks, it has not made a new high. So gold is leading to the upside. So, of course, we're going to buy that which is strongest, and that is gold. Gold key indicators here are neutral, but of course our fully paid up members see other additional factors which clearly show the bullish situation in gold. Crude oil has stabilized and I think it's going to stabilize in this area. I really just don't see it going any higher. One of the things I want to point out here is look for the market to kind of sell off a little bit more, maybe down to 35. The key here is notice how we made a higher high about 4 days ago. In other words, we surmounted the high that we made in early June. So it's a higher high. And we've been making higher lows. So clearly that's the definition of a bull market. But look at the skinny green line just above the price chart. That's the RSI, the Relative Strength Index, and it's a measurement of the momentum of the market. It did not make a new high. That's what we call a momentum divergence or an RSI divergence, and it tells us that the market is running out of gas. And when that happens, it sells off. And of course, we did sell off in the latter part of the week. But I think we can see a little bit more weakness, like I say, maybe down to 36 or 35 in crude oil. Okay, Bitcoin, I'm now turning bearish. Purple predictor, clearly bearish. We've now broken the lows that we made a couple of weeks ago. We've broken down all kinds of technical support. So I need to get on the short side. For me, the best way to get on the short side is through futures or CFDs, depending on which country you live in. Americans can't trade CFDs, so futures are the best thing. Otherwise, it's hard to go short Bitcoin, get a good fill, all that sort of stuff. But there's no real good ETF either. So shorting Bitcoin, I'm telling you, I'm shorting Bitcoin, but the best thing is in the CFD or in the futures market. And we'll put a stop up around 98.50 as a stop loss. All right, everybody. Thank you, freebies. You're seeing unique indicators. Fully paid up members, hang on just a moment.